evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 18th of June, 2019, and we've got the Fed on our mind, especially with what Mario Draghi and the ECB, European Central Bank, did this morning, really overnight, with their interest rates. And that's what sent the market surging up above, not just 2,900 in the S&P futures, but also 2911, triggering a trend day and short squeeze play. Tomorrow, or by the time you see this video, Wednesday, will be the Fed policy announcement. Will they raise rates? Absolutely not. Will they keep rates the same? Probably. Or will they actually cut rates in the next meeting? Probably not, but possibly. So tonight's video, we're going to take a look at those three scenarios, focusing mainly on the S&P, which is a stock market or a proxy for the stock market, and bonds, specifically ZN, which is our 10-year Treasury note. So that's going to be the focus of tomorrow's Fed Day. And of course, let's start with the S&P futures. But first, we'll take a look at just what happened today. The S&P was up 1%, 30 points. Big news in the Dow futures. A lot of that was Boeing. Boeing was up 5% today, followed by Qualcomm, GE, MMM, Intel, Nike with Bank of America. But the biggest gainer today was the Nasdaq. It was up 1.5% with the Russell up 1%. Now something else jumps off the chart at us. It's crude oil. Crude was up just popped right there, 4% in today's trading session. So let's start with the S&P and then drill down to these other markets, especially the bond market. With the market into this 2,900 and above, at least as we speak, 2,911, that does set a short squeeze or bullish upside pathway. I'm calling it the alternate thesis, which is going to take price to this prior high near 29.55, thereabout. So we do have a short squeeze bull departure pathway if the market continues to trade up above 2911. Quick look at the Dow. It's above the 26,000 spot with a trend day to the upside. Nasdaq is bursting through 7,600, and the Russell is going to end at this 1555, almost 1550 spot, which happens to be near the midpoint of the 1600 and 1550 trading range. Keep in mind, the Russell is the weakest in 2019. That's because the Nasdaq is just about at the high, the Dow futures just about at the high, and the S&P about to make or possibly trying to make all-time highs. Now let's take a look at crude oil. It's within this trading range between roughly 55 per barrel and 50. This places it between this spot. We'll expand out a little bit further into 55 per barrel and just shy of the 20 exponential. That's going to be a pivot point for oil. And gold, we see it pushing up through this bullish short squeezed pathway and the bull flag, if you will, and any departure above 1300 sent it straight up as per the plan and trades to where we are now, which is 1550. Bonds, I think that's going to be the focal point for tomorrow's session, especially the Fed Day. Will they raise rates? Again, no. Will they keep rates the same? Probably. Or will they actually go ahead and surprise us all with a rate cut? So if they do the rate cut, you'll almost certainly see bond prices surge through 127, and that's going to correspond with about 155 in the ZB, or the TLT. That's an ETF we like to trade. That's going to be about 132.50. So that's your rate cut scenario. The rate stabilization scenario puts bond prices probably still under bullish pressure and an uptrend with higher volume and higher prices. And again, we can look at this from the price perspective. If the Fed cuts rates, bond prices keep going higher. If the Fed keeps rates the same, but yet says, in the future, in our July meeting, we'll probably cut rates, that could also send bond prices higher along with the equity market. We can look at it also from, TNX is the Treasury Yield. Now we look at it just in terms of 3.2%, 3%, 2.5%, and a push down in 10-year Treasury yields for the index to about the 2% level. We can see how this has played out in the past. Note that if the yield on the 10-year note breaks under 2%, it looks like 20 on the chart, but it's actually 2%. we can see downside action toward 1.4 or 1.5. And that was a level that was achieved really in mid-2016. That would correspond, if you look at ZB, or ZN actually, with 127. So we do have continued upside action if the Fed especially is dovish. Dovish means they're willing to support the market with a rate cut or keeping rates the same. And that could push bond prices even higher, and again, yields lower, and could be a catalyst. Here's the bigger picture of the S&P, which could burst it even higher toward 3,000. So again, the three scenarios for tomorrow's Fed day in terms of probability: the lowest chance, which is pretty much nil to none, is that they raise rates. Nope, not going to happen. If that happened, you'd see the market collapse at that point. You'd also see treasuries collapse and yields would go up. That's not going to happen. The Fed is either going to keep rates the same, and if they do the keep it the same policy, they may announce guidance. Guidance is what they talk about for the future, which is how they see economic trends and economic numbers behind the scenes. So if they see weakness, they may come out and say, we'll keep rates the same here in June, but in July, we are data dependent, but we may actually lean toward the cut scenario. And that could surge bond prices higher and stock market higher as well. That's considered the rate hike the same, but guidance for future cuts. What may actually wind up happening is they'll keep rates the same and not issue any clear future guidance. And that could lead to a range day or chop in the stock market, and of course chop in bonds as well. What we're all on par for is that the Fed comes out tomorrow and actually cuts their overnight interest rates. If that happens, again, that's a lower probability, not quite as low as the raise or a hike possibility. Again, that's not going to happen. But most probably they'll keep rates the same. But we have to be prepared as traders not to forecast the market, but to plan and prepare for all scenarios. So if the Fed does announce and surprises the market that they have decided to cut interest rates immediately here in June, that could be a bullish catalyst for new highs toward 3,000 in the S&P futures, new highs beyond 26,500 in the Dow, upwards toward 27,000. In the Nasdaq, a surge beyond 7,700 toward, yes, actually, toward this 8,000 print in the Nasdaq. Of course, not in the same day, but in the future. And the Russell, which is a weaker index, pushing up towards 1,600. And of course, we'll be watching all these things, making note of what the Fed states, any guidance that they give, which is just clues about the future, and what they will likely do in July. We pretty much know they'll keep rates the same in June, but we are certainly, as traders, on guard to act and react, position and reposition if they don't. But as always, be safe. This is Corey Rosenblum with your Theo Nightly video for June 18th, 2019.